We start with the escalating trade war as the U.S. and China continue to go head-to-head. The president making comments earlier today, capping a busy day of trade headlines. Let's go out to Eamon Javers in D.C. for those details. Eamon.
Yeah, Scott, that's right. The administration broadly defending the president's approach here in terms of the tariffs on China that he announced last night. Wilbur Ross was on CNBC earlier today, and he said ultimately he believes that the United States has the upper hand in this negotiation. Here's what he said.
China doesn't have enough imports from us to make a reciprocal tax. China, we sell them less than $150 billion a year. So in that sense, they're out of bullets.
At a press conference later in the day in the East Room here at the White House, the president talked about his approach broadly to this trade issue. He said ultimately the American public has been paying the price for what he framed as decades of mismanagement by American politicians and American presidents who preceded him. Here's what he said.
We are the piggy bank to the world. We've been ripped off by China. We've been ripped off by, excuse me, Mr. President, the European Union, of which you're a part of. We've been ripped off by everybody. And I want to protect the American worker, the American farmer, the ranchers, the companies. And we're not being ripped off, you will see in a little while.
No indication from the president or anybody else here at the White House today as to whether or not the U.S. is going to automatically respond to the Chinese retaliation that was announced this morning. In the president's announcement yesterday, he said the United States would automatically follow up on any Chinese retaliation with additional tariffs of the U.S. on the part of the U.S. of up to $267 billion of tariffs on additional goods coming from China. That would be pretty much every export from China to the United States that would be facing tariffs in that situation. It's assumed here in Washington that the president, when he says automatic, he means automatic, and that's coming as well. But we'll wait and see for that, Scott.
Sure will. Eamon, thanks so much. Eamon Javers, North Lawn of the White House this evening. Despite the trade war, the Dow staged quite the rally today, surging at one point more than 250 points as consumer discretionary and industrials, which are most sensitive to trade fears, leading the way. Guy, I guess it's what trade war? You look at the market today. Market doesn't seem to care.
I think it's what Steve alluded to last night in terms of the 10% versus 25% and what a difference a day makes. I take a little umbrage with what Mr. Ross said. I don't think the Chinese are out of bullets. I think they have a number of bullets, not least of which they could devalue their currency and we back to square zero. I'm not saying they're going to do that, but they definitely still have bullets in the gun. With that said, I mean, what the market continues to tell you is they do think that there's going to be some sort of not reconciliation, but they'll come to some sort of agreement and everything will be fine. I'm not certain that is the case. What I will say, and we talked about this last week, for whatever reason, all of a sudden, steel stocks seem to be getting their footing. We mentioned Cleveland-Cliffs last week. With the rest of the steel sector lower, that's been going higher. Up again today, almost 4%, as was U.S. Steel. So there have been things that are starting to show some rays of hope. And it comes in the form, in my opinion, of steel stocks and a lot of these pharmaceutical stocks that continue just to grind higher.
Well, listen, I mean, the market clearly said today, in markets, perception is reality. And the perception is we are closer to the end of this trade war than the beginning of this trade war. And that's what the markets are telling you today. To Steve's point, 10% wasn't as much as 25%. We have the headline up saying the trade war escalates. The market's saying today was a de-escalation. I don't know if it's going to be right in 3 months, but for today, it appears to be the right.
Hey, Goldman thinks that it's going to get worse. Are we too complacent?
I agree with Goldman. No, come on, guys. I mean, I agree with Guy. First of all, I think they do have other bullets. Guy's pointed out pretty much every time we talk that the Chinese are in this for the long haul. I would argue, first of all, the data came out. China's been a net seller of treasuries 4 out of the last 5 months. Again, not in their best interest to dump treasuries, but I think they're in a position to play not only a longer game, but as I will continue to say, this is not your father's trade war.
So why hasn't the market,
about China 2025?
Why hasn't the market reacted to it, though? So you have to trade the market that's in front of you. I would think that the market has made up its mind that the U.S. has more leverage than the Chinese.
For the moment.
For today, right.
Yeah, but to
for
BK's point, I think we're closer to the end. So Guy mentioned the guy.
So the market is at all-time highs. The market has totally outperformed the rest of the world. You're seeing actually global indicators which indicate the trade war is having a major effect. If it has a major effect on the globe, it does have an effect on us. And it's been so long since we've gotten back to the revenue, the percentage of revenues from the S&P that are international.
The market is a forward-looking mechanism, and it doesn't see headwinds for the United States market. It's always about 6 to 8 months ahead.
It's absolutely fair to say that here we are right near the highs, and the market is certainly looking at growth in tech and defensive sectors, and that the rest of the world has been an aberration.
Look,
I don't think that continues. And by the way, I also
growth
think
in tech is underperformed, and the market has done the heavy lifting outside of that. So there's been other triggers that have pushed this market higher, and you don't see people diving into emerging markets even with their underperformance.
I don't think we're going to know for a while. I mean, you get Polaris, Macy's, FedEx. There were a handful of others today that are the CEOs talking about.
But even if they do come out,
it's all about earnings.
This is still about earnings and the fundamental backdrop in the USA market, and it's still positive. And trust me, these politicians are doing their own polling going into midterm elections. This is still resonating with the voter.
But it comes down to whether or not investors think this is a permanent issue or is it temporary. And I'm just saying today, investors are saying they think this is temporary. So even if we get earnings reports that come out and say trade war is hurting us, as long as investors believe that this is a one-quarter phenomenon, and let's call it January, February, things are going to be better, then you're going to be okay. If it doesn't, if it goes on and it escalates and they devalue and they sell treasuries, then we've got a real problem.
There's no reason to really believe that the Chinese are going to come to the table ahead of the midterm elections, is there?
I don't believe it, and I've said it before. I'm not suggesting I'm right. In my opinion, I don't see any reason for them to. Given what's going on in the country right now, why would, if they've waited this long, why would the Chinese come to the table?
If he does something behind the scenes to just play the olive branch. He talks tough on television, but what happens if there's something behind the scenes where he's offering them a more enticing deal, more incentivize the Chinese to come to that table?
By the way,
possibility.
If we continue to get this kind of a move in markets, and actually the dollar that weakens, that puts the Fed more in play than less. And that is something that I don't think we're acknowledging. I think the Fed will go in December, and I think they're probably going to go 3 more times. We think we know where terminal rates are going to be. But if you look at the dynamics here, I think the market is not pricing in enough risk. And the fact that we've got a VIX now at 12, or at least with a 12 handle, that doesn't, today I don't feel like running into the market saying, oh, wow, fresh highs on the S&P because we didn't respond poorly to trade news.
Yeah, it's pretty remarkable when you think about it. You go, you get this announcement, you have tough talk. The president was in the Oval Office sitting next to the Polish president today and said if China continues to retaliate, then they're going to do the 267 billion additional, right? You get this tough rhetoric, this bluster. I don't know what you want, whatever you want to call it. And the Dow only goes up.
Right.
The Dow goes.
But even the retaliation, do you remember when we talked about this a couple of months ago? The retaliation from the Chinese government was supposed to be 5, 10, 25, or 30% retaliation. Now they're only saying 5 or 10. So they're all backing off what they initially said.